Alright, welcome to the introduction of salaries and wages. I did give you a brief introduction to this section in life orientation, but we were not really relating to the accounting aspects of our salaries and wages, and we were rather just referring to how the employee sees their salaries and wages. So now we are going to show the difference between how your employee would see their salaries and wage compared to the employer, which would be obviously the business. The first conflict that we see with salaries and wages is that most students do not understand that employees are expenses to the business. Usually a learner would think that because the employee is actually making the business money, they could see them as an asset. But this is not the case because we do not have control over our employees. They can quit or they can give a notice and leave the business whenever they feel like it. So we have no control over them. So they are not considered an asset to us. So you need to understand that employees are an expense to your business. We must pay our employees for the work that they have done for us, but obviously that is an expense to us. So we actually consider the expense, the wages, or the salary that we pay our employee. Right, so how much do we actually owe our employees? Well, we owe them their full gross salary, even though they do not see this full gross salary in their bank account. So how much do we actually pay our employees would be their net salary. But we do actually provide them with the rest of their money in their gross salary, because their gross salary includes all their deductions. And their deductions are to their UIF fund, to their pension fund, and the business must then pay, and to their medical aid fund, the business must then pay those amounts to those relative funds. So actually the business is paying the gross salary, but the employee will only see its net salary. So now just to recap what a gross salary is, the employee will negotiate a gross salary with the employer at the beginning of their employment. So this is really up to that negotiation. Usually they'll look at the industry norm. You will never have to work this out. Your gross salary should always be given to you. The gross salary is before the compulsory deductions are taken off. So we do have some compulsory deductions. Some deductions can be added onto those on the if the employee wants it to, but there are some compulsory ones. Now we're going to look at what these compulsory deductions are. So the compulsory deductions are items that have to be taken out of our gross salary. So we have a pension fund, we have a medical aid fund, UIF, which stands for Unemployment Insurance Fund, so be aware of that. And then they have PAYE, which is pay as you earn. Pay as you earn. Alright, and then that is held by the employer and is paid over to SARS on the employee's behalf. Actually, all of these items over here, your compulsory deductions, are paid by the employer, and held, they're held back on the employee's behalf and then paid by the employer to the relative funds and to SARS. Alright, so these are things that are expenses to the employee. How do you think the employer will classify them? Well, the employer actually has an obligation to pay these amounts over to the relative funds and to SARS. So we would actually see, as the business, as the employer, we would see these items as liabilities. And then obviously we'll be paid to those funds and deduct those liabilities from that amount. Right. How do we calculate net salary? Okay, so our net salary is our gross salary minus all of our deductions. So PAYE, pension fund, medical aid fund, UIF, and that will give us our net salary. So our net salary is gross salary less deductions. SARS, UIF, pension fund, and medical aid fund, which are the same deductions that we see in our employees section over here, and these are also liabilities to the business because they are going to pay those amounts from the gross salary into UIF, the UIF fund and the pension fund and the medical aid fund. Then we have the contributions section of our employer. So we have UIF contributions, pension fund contributions, medical aid contributions, and we could also have there the skill development levy. And these are expenses to our business because we are then additionally contributing to these funds on our employees' behalf. Alright, so just to recap, our employee, we are not actually interested in the accounting effect of our employee because that they would look at their own books for. So we are only really considered with this, we're only really interested with this employer section. And this employer section is then going to be these accounts over here that we have just discussed. So remember that your salaries and wages, gross salary is the expense to the business, which includes then we have liabilities for creditors for salaries, SARS, PAYE, UIF, pension fund, medical aid fund, and then additionally we have employer contributions, UIF contribution, pension fund contributions, medical aid contribution, and the skill development levy. Alright, this concludes my introduction to salaries and wages. The next tutorial will show you how to prepare a wages journal.